Look at this candle. At first it looks like a losing trade. The stop loss gets hit, the breakout fails, and it feels like price just went exactly where you didn't want it to go. But here's the interesting part. This isn't where the trade fails. This is where the setup begins. We're on a 5-minute chart. Price has been moving higher, push, pull back, push again. But look just below the current price. There's an old low sitting there. It hasn't been touched in a while. And it's obvious, which means traders are watching it. And if everyone can see the same low, you can probably guess what's sitting underneath it. Stop losses. Lots of them. So this isn't really just a support level. It's a pool of liquidity. And sooner or later, price may come looking for it. And now, it does. Price turns down and breaks below the old low. Stops get triggered, orders get filled. For a moment, it looks like the market is breaking down. But watch what happens next, because this is where the story changes. Price snaps straight back above the level. That wasn't a real breakdown. It was a liquidity sweep. Price took the stop sitting below the low and then reversed. But we still don't enter. We wait for confirmation. And when price breaks back above the recent high, the market structure shifts. Now our bias has changed. But price doesn't just keep running higher. It pulls back and comes right back to the area it just broke through. This is the retest. And this is where the setup becomes interesting. We are no longer chasing price. We are waiting to see if that level actually holds. And it holds. Confirmation comes in and the entry triggers. The stop loss goes just beyond the sweep, because if price comes back there, the setup is probably invalid. And the target? The next area where opposing liquidity is sitting. So the risk is 1 hour and the potential reward is 2 hour. A simple 1 to 2 setup. Now comes the part most traders overthink. The trade doesn't need to move perfectly. It just needs to respect the level. Price pushes, pauses, pushes again, pauses, and pushes higher. The stop stays exactly where it was. No chasing, no moving the stop out of fear. Just letting the setup play out. And eventually, price reaches the target. The trade wasn't about predicting the future, and it wasn't luck. It was about recognizing where liquidity was sitting, watching price take it, and waiting for the market to show its hand. So remember the sequence: sweep, shift, retest, entry. 4 simple steps when price hunts liquidity before making its real move. Learn to see the setup, and the stop loss everyone feared might just become the trade everyone else missed.